Hey, this is Matt from InvestiQuant. Today is Monday, January 24, 2022. Last week was a bearish week in the markets. Fridays closed at the lows of the week, and we had our first time closing below the 200-day simple moving average in quite a while in the S&P. That only happened in the S&P. We've got an interesting pattern taking place there, and that's what we'll look at this morning. Is what's called a down straddle. I'll explain that here in just a moment. But let me go ahead and get this set up. I will grab all four of the instruments. The setup will be based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading lower in the overnight session. So when I go down to the opening filters library, I can go to gap direction and click on gap down to add that to the test. I've got that selected. Now, the next thing we're going to add is this pattern that's taking place specifically in the S&P this morning. It's just true for the S&P today, so it won't be true for the other instruments, but it is somewhat interesting. And that pattern is a moving average straddle. And there's a couple variations of what a moving average straddle is. And basically what it is a two-day daily candlestick or daily closing price pattern where you close on one side of a moving average followed by a close on the opposite side of the moving average. So in this case, Thursday, the S&P closed above the 200-day simple moving average. And then Friday, the S&P closed below the 200-day simple moving average. So we pushed below the 200-day simple moving average, closing down there. So that's called a down straddle here. And I can go down to moving average straddles here and click on day after down straddle of the 200-day simple moving average. Active today is telling me that it is true for today. So I've grabbed that. That's the pattern we'll be looking at. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when you have a down straddle of the 200-day simple moving average followed by a gap down. The S&P has 24 samples of this pattern dating back to 2003. The NASDAQ comes in at 29, 25 for the Dow, 33 for the Russell. If we look at the win rates on them, they're quite mixed, with the S&P being the strongest of the group. 71% of these have closed above the open historically. The NASDAQ just 34, so quite weak there. The Dow, 52%, the Russell a little weak at 42%. If we look at the average moves, S&P very similar in size for its average moves. The NASDAQ has had some larger losses here over the past handful of years, and that has skewed the average loss quite a bit larger than the average win. You can see that in the equity curves there. The NASDAQ is the orange equity curve. If I just hover my mouse over it, you'll see it. For the Dow, the average win is larger than the average loss, and for the Russell, the average loss is larger than the average win. So we're pretty mixed on a lot of these results, both average moves and win rates. As I said earlier, this pattern is only applicable for the S&P today, and the S&P has been the strongest of the group with this pattern. See the last couple times that it's happened here. Last time actually happened right there during the pandemic of 2020. We had a couple days where it took place, both resulting in pretty sizable moves to the upside. But obviously this doesn't happen all that often, so it caught my attention and wanted to take a look at it this morning. Hopefully you found this helpful. Good luck today. We'll see you next time.